Hello and welcome to Smart Dollar Resource, your go-to hub for all things investing. Today we're delving into the world of long-term investing. As the name suggests, long-term investing is all about playing the long game, looking past the daily ups and downs of the market to focus on the potential for substantial growth over years, even decades. We're going to explore what it means to have a long-term perspective, the rewards and risks involved, and how you can use this understanding to your advantage. We'll also share 5 valuable lessons that long-term investing can teach you. Whether you're just starting your investment journey or you're a seasoned pro looking for a fresh perspective, there's something here for everyone. So don't forget to hit that like button, subscribe, and check out the resources linked in the description below. So, buckle up as we embark on this journey to financial freedom. You may wonder, what exactly is long-term investing? Well, let's dive into this fascinating world. At its core, long-term investing refers to the practice of buying and holding investment securities for an extended period, typically for years or even decades. It's all about playing the long game, understanding that wealth accumulation doesn't happen overnight. Long-term investing differs significantly from short-term investing, which typically involves buying and selling stocks within a year, a month, or even a day. While short-term investing can offer quick returns, it's often associated with higher risks and requires a lot more time and effort for monitoring market fluctuations. On the other hand, long-term investing is a strategy that focuses on the future. It's about making investments today that will grow over time, riding out the inevitable ups and downs of the market. This approach is based on the well-documented principle of compound interest, sometimes referred to as the 8th wonder of the world. The magic of compounding allows your earnings to generate even more earnings over time, leading to exponential growth. But here's the catch. Long-term investing requires a particular mindset. It's not for the faint-hearted or those seeking quick riches. It demands patience, resilience, and a deep understanding that markets will fluctuate. It's about remaining committed to your investment goals, even when the financial landscape seems uncertain. You need to view your investments as seeds planted today, which, with time, patience, and proper care, will grow into sturdy trees bearing fruits in the future. It's about trusting the process and the power of time, not getting swayed by short-term market noise. So, simply put, long-term investing is a marathon, not a sprint. It's a journey where steadiness and endurance pay off. It's about aligning your financial decisions with your life goals, whether it's buying a home, funding your child's education, or securing a comfortable retirement. So, fasten your seatbelts and get ready for this exciting journey towards financial freedom with the power of long-term investing. Now that we've defined long-term investing, let's explore its advantages. One of the most powerful benefits of long-term investing is the magic of compounding. This is the process where your earnings generate even more earnings. You receive interest not only on your original investments but also on any interest, dividends, and capital gains that accumulate, so your money can grow faster and faster as the years roll on. It's like a snowball effect. The longer you leave your money in the investment, the bigger it grows. Then, there's risk mitigation. When you invest for the long term, you're less affected by short-term volatility. The stock market is like a voting machine in the short run, but a weighing machine in the long run. In other words, while the stock market can be influenced by hype and emotions in the short term, it tends to reflect the actual value of companies in the long term. So by staying invested for a longer period, you're more likely to experience the weighing machine effect and less likely to suffer from short-term voting machine volatility. Another advantage is the potential for higher returns. Historically, the stock market has provided more attractive long-term returns than other less risky assets like bonds or cash. So if you're investing for a long period, say for your retirement, stocks are a good option that can potentially provide a decent return on your money. Long-term investing also offers tax advantages. If you hold an investment for more than a year before you sell, your profit is considered a long-term capital gain, which is usually taxed at a lower rate than your regular income. This can make a significant difference in your after-tax return. Lastly, long-term investing requires less effort. Unlike day trading, which requires constant monitoring of market fluctuations, long-term investing involves less stress, less time, and less trading fees. Clearly, the advantages of a long-term perspective in investing are quite compelling. Like any investment approach, long-term investing has its cons too. Let's dive right in. The first setback of long-term investing is the requirement of patience. Rome wasn't built in a day, and neither is wealth. Long-term investing is a waiting game. It's about planting seeds and waiting for them to grow. This can take years, even decades. For those seeking quick returns, this isn't the strategy for you. Then there's the potential for short-term losses. The market can be volatile, and it's entirely possible to see your investments drop in value at certain points. This is a part of the process, but it can be tough to watch, and even harder to stomach. It's important to remember that these short-term losses do not necessarily predict long-term performance, but it's easier said than done when the numbers are staring you in the face. Another con is the uncertainty of market conditions. The market is influenced by countless variables, from economic indicators to global events, and it's impossible to predict with absolute certainty. This uncertainty can make long-term investing feel like a gamble. But remember, it's not about timing the market, it's about time in the market. Inflation is another factor to consider. Over time, the cost of goods and services tends to rise, and the value of your money decreases. While your investments may appreciate in value, inflation can eat into your returns. It's a silent but very real threat to your long-term investing strategy. Lastly, long-term investing ties up your money for extended periods. This means that you have less liquidity, less cash on hand for emergencies or opportunities that might arise. This lack of flexibility can be a disadvantage, especially in times of financial strain. While these cons exist, understanding and managing them is part of being a successful long-term investor. It's about balancing the risks and rewards and making informed decisions that align with your financial goals. Remember, every investment strategy has its pros and cons. The key is to choose the one that best suits your individual circumstances and risk tolerance. You've understood the pros and cons now. How can you use this knowledge to your advantage? It all begins with setting your financial goals. This is your roadmap to financial success. Whether you're saving for a new home, retirement, or your child's college education, having a clear goal in sight will help guide your investment decisions. Next, diversification is key. It's the age-old advice of not putting all your eggs in one basket. This means spreading your investments across different asset classes and industries. It's a way to mitigate risk and potentially enhance returns over time. Remember, the goal of long-term investing isn't to get rich quick, but to grow your wealth steadily over time. Another crucial aspect of long-term investing is understanding the power of compounding. Albert Einstein famously called compounding the eighth wonder of the world. In simple terms, it's the process of earning interest on your interest. Over time, even small amounts can grow into substantial sums. Now let's talk about patience. Investing is not a sprint, it's a marathon. The stock market will have its ups and downs. There will be periods of growth and periods of decline. But remember, you're in this for the long haul. Don't let short-term fluctuations deter you from your long-term goals. Lastly, regular portfolio review is vital. This doesn't mean you need to check your investments every day. Quite the opposite. Checking too often can lead to impulsive decisions based on short-term market movements. Instead, consider reviewing your portfolio on a semi-annual or annual basis. This will help you ensure your investments are still aligned with your goals and risk tolerance. And remember, you don't have to do it alone. There are numerous resources available to help you on your investment journey. Whether it's a financial advisor, investment books, or a brokerage app, make use of the tools available to you. With these tips, you're well on your way to mastering long-term investing. We've come a long way in understanding long-term investing today. We've explored its meaning, weighed its pros and cons, and learned how to use it to our advantage. The beauty of long-term investing lies in the lessons it teaches: patience, discipline, resilience, and the power of compound interest. Now it's your turn to take this knowledge and put it to work. Remember, every journey begins with a single step, and every investor, no matter how seasoned, started somewhere. To help you on this journey, we have curated a list of resources available in the description below. Don't forget to hit that like button if you found this video helpful, and subscribe to Smart Dollar Resource for more investing insights. We'd love to hear your thoughts in the comments. Thank you for joining us today at Smart Dollar Resource, and we'll see you in the next video. Until then, keep investing smartly.